Hey traders, this is Christian from Hertz, Tribeca Trade Group with your beginning of the week video. Things to watch this week, technicals to watch, levels to watch. And so U.S. markets were closed today. It is Monday, January 2nd. European markets were open today. So really a great opportunity to take a look at some levels to watch in the major indices and to get focused for the week. Okay, so first things first. A lot of market participants were on vacation last week. It was a low volume week, myself included. I was out for the week. So I just want to take a look at the sectors that performed best for last week just to kind of get us ready for this week coming up. So, gold miners, big outperformance last week, up 9.4%. This even includes they were down about 3% on Friday. So really some strong performance there. Nice big bounce from those miners that have been in a massive downtrend for the last few months. Other, performers that did well last week were a lot of the defensives. REITs performed well. Utilities were basically flat for the week. Healthcare was flat for the week. Underperformers, metals and mining, steel. A lot of groups were basically down more than 1% last week. So a little bit of price digestion there. In terms of international performers, I have a very large watch list that I look out for international countries as well as regions. You could see a lot of the emerging markets did pretty well last week. I think the dollar pulled back a little bit, which gave a little bit of a bounce to some of the emerging markets that were, I think, a little bit oversold. Brazil was up 6%, Indonesia up 5.7%, Vietnam up 4%. Russia continues to power ahead, up 3.1% for the week. And then on the worst performing side, Japan, which has been in a nice, has had some really nice performance the last couple months, actually pulled back a little bit last week. So that's what happened last week. Let's just get to considering European markets were open. Let's see, what do I want to bring here first? Yeah, there we go. Nice start for 2017. The DAX was up 1%. Euro Stoxx up 50 basis points. The FTSE, the UK was closed. So we'll see how that opens up tomorrow. But the CAC was also up. So a lot of green there. So nice looking performance. So just taking a look at our newsletter. We do this newsletter every week, kind of a very thorough look at all the macro indicators, and then we actually drill down into some of those micro as well. But what to look at for the beginning of the week in terms of, it's a pretty healthy week of economics. Considering they kind of held off on some of the things last week, but ISM, that is a leading indicator. I'm always more interested in more of the leading indicators than the lagging economic indicators. ISM is one of those forward-looking or leading indicators. We get that at 10 o'clock. That's a half hour after the open. So ISM manufacturing, we get a couple other ones, prices paid, as so forth. Construction spending also is out. On Wednesday, we get the Fed meeting minutes, so that could be some interest there. Considering, last time Janet Yellen spoke, she said that there was going to be possibly 3 rate increases in the year of 2017. Are Fed fund futures expecting that? Not at all. If you look at the first meeting, which is February 1st, it's only about a 12% chance what Fed fund futures are pricing in for the first for a chance of a rate hike. So 12.4, not a big probability there of a rate hike. Even going out to March, it's only 31%. So we'll see if the economics this week. Let's see if Janet Yellen speaking or the Fed minutes being released changes that as well. So going on to our next data point, we've got ISM non-manufacturing. That comes out Thursday. And then Friday, it's the first Friday of the month, so we get jobs data. We get the December read in private payrolls, non-farm payrolls as well. Looks like they're expecting about 178, 170. So that'll be Friday. And I think that's probably, other than ISM, probably the most important data point that we're going to get in U.S. economics. So watch things like, I'm going to get into some of the charts, but, bonds, they move around. The dollar moves around. Gold miners, gold is also going to move on some of this data that we're going to get. Also important, coming up on the horizon, we're going to get fourth quarter earnings. I think this is going to be really interesting. We don't have much this week. Constellation Brands, Walgreens, Monsanto, and then right here, Alcoa kicks off. I think that's I think the 9th is Monday. So I think this could be one of the most interesting quarters for earnings that we've seen in a long time because the markets have had such a nice run up. It'll be interesting to see if some of these names can follow through with strong earnings reports. If not, you're going to see some names correct a bit. But for those strong performers, names that have had good earnings, maybe we see a little bit of continuation. Perhaps even some names that really haven't participated. Your names like Amazon and Google, and a few other names that really haven't participated in the big equity rally of November, the beginning of December. Those might be ripe for nice moves here. So, like I said, I think it'll be very interesting. That starts next week. So those are the major events to watch. Let's just go into a couple other things that are on my radar. So that's the market recap, what to watch. Every week I put out a market view, and I put whether or not I'm bullish, bearish, or basically neutral, based on some indicators that I look at, both technicals as well as things like the Baltic Dry Index. And I know, I see a lot of people on Twitter, and they'll talk about long-term bullish. I'm long-term bullish as well for the year 2017. I'm absolutely bullish until we see a break of the uptrend. This is pretty easy stuff. However, that's great if you're sitting with for your 401k, your IRA, things that you don't trade around. If you're an active trader, you want to put. I think you want to put a view. And if you're not going to trade at all, then that's fine. You don't need to come up with a view every week. But I'd like to talk about what my view is for the week. The last 3 weeks, I've been neutral, and I've been really dead on with this market view. Going back pre-election, where I was bearish and then I turned to bullish right before the election, and I was that way for a couple of weeks. We had some really nice trading in the month of November. Great profits in the swing trades that we took at Tribeca Trade Group. But for the last 3 weeks, the technicals have not. We got overbought, and we went from burning off overbought levels to more of a little bit of a consolidation here. And I think there's other forces that are at work here, and why I'm going to remain neutral U.S. equities in the beginning of this week. Now, if things change, if we see some changes in the technicals, which I'm going to get to that, what would make me more bullish short term, I'm going to go through the major indices to point that out. But one of the things that I looked at is the Baltic Dry Index. So the election was not the only thing that drove us higher. Take a look at the Baltic Dry is a great indication of whether or not there's a high level of commerce going on. And you can see in November, the beginning of November, this huge rise. It's the Baltic Dry Index is the white line on this chart. Let me just stretch this out. So you could see, this big move up, even before the election, you could see that the Baltic Dry moved up, fairly well here. But you could see that the last couple of weeks, it's been moving back down. So it's still in an uptrend, which is great. If we come back here, and I would love to see us take out the November highs, but you could see that the market got a little bit ahead of itself in terms of this activity, and you could see there's not an exact one-for-one relationship, but it is a positive correlation between equities and the Baltic Dry Index. So, maybe these two lines come in here and meet at some point, or touch. Just something to keep an eye on. Just like, besides the election, we also saw in November copper rally hard. We saw iron ore rally hard. But these things have pulled back a little bit. Iron ore not so much, copper a little bit more. Okay, so that's something I have my eye on. And in the major indices, taking a look at the weekly chart, why I want to look at the weekly chart is because we've got a brand new value area for the year of 2017. And, again, why I look at value areas is because it's volume at price, not volume at time. It's, to me, much more important where the volume occurs at particular price points. So the value areas do a great job of that for us. They tell us where the majority of the volume has occurred and at what prices. So we've got for SPY, zoom in here a little bit. We've got the value area for 2017, and this is pretty easy. We're in an uptrend. We've got defined support 219.97. Call it 220 in the SPY is your defined support. So as long as we're above that, in my 401k and my IRA, I'm going to stay long things. I want to see things like, this again is the weekly chart. I'm gonna move over to the daily chart in just a second, but we're above this uptrend line. One point I wanted to make here is, since this is a weekly chart, every bar is a week, represents a week. You can see for the last 3 weeks, we really haven't taken out this big green bullish candle here. So they've basically been inside weeks. Again, no major damage, no technical damage has been done here. So what I'm looking for is, if we could hold right here, and if we could stay above the support, I think it's a pretty good sign. If we manage to move down here this week, I would be looking to possibly add some longs, waiting for aggressive option activity to rise to the surface, which we certainly didn't see that last week. But I think if that coincides with a nice technical support here, I think we'll be sitting pretty here. I think that'll be really nice. So looking at SPY on the instead of the daily chart, looking at the weekly, what do we see in the smaller time frame here? Is that for the last couple of weeks we had a bearish crossover here in the MACD. So, let's kind of sit and wait for the technicals to line up. Let's wait for the blue line to cross back above the white line here in the MACD to trigger a bull swing. Also looking at the value areas, it looks like we're going to open up right around the bottom of value for the month of January. This is January's value area. If we can hold here and perhaps rally into the value area for the month of January, that would be bullish. But again, I want to wait till these technicals start to line up the way that I want them to, such as the MACD. You could also look at the Raptor indicator, which I can touch upon as well. Next, looking at the Qs. Qs is a little bit different picture. Again, SPY, we're above value. We're starting above value for the year. Qs is a different picture. We're going to open up the year, it looks like, in value, but we're really not too far away from moving above. That's 121.52. So I'll wait. I'm really not going to do anything here in the Qs until we get back above value for the year. If we do, I would be looking for such things like an MACD crossover, like a stochastics as well. So again, this is the weekly chart, but that's what I would be looking at for bigger picture. And then IWM, small caps have been the outperformer here. This intuitively, this kind of makes sense to me. I believe that small caps, they generally, the 2,000 companies that are in the Russell 2000, they have less exposure to a rising dollar. They do less of their business overseas. More of their business is domestic, generally, at least comparable to multinational corporations that are in the S&P 500. So it kind of makes sense how IWM has continued to rally here. So what does this look like for the weekly chart? Where to kind of position ourselves here? Well, we're definitely in an uptrend. We've burned off those overbought levels. I would love to see a move back and retest this breakout zone. That's right around 129.23. That's a couple percent down. If we can't get that, if we kind of come in here a little bit underneath the yellow line, which is the 5-period exponential moving average, look at as well how far away the yellow line is from the blue, which is the 20-period exponential moving average. It still looks a little extended to me. It's not overbought, but I would love to see a little bit of a move back here. And I think buying small caps on dips is going to be a possible theme of mine for 2017 as far as domestic equities go. So that's what I'm looking at there. Looking under the hood, I always want to look at what the sectors are telling me. Do we have good breath, bad breath? In terms of, are there a lot of sectors that are performing? Are there, a few horses pulling the wagon, or is the rally much more widespread? Well, you can see here in the green, you've got 7 different sectors that are above the 50-day moving average. That's great. We're above, those 7 sectors are not only above the 50, but above the 100 and the 200-day. So that's strong. The trend is strong. So if you're long term, I think you want to stay the course in most of these sectors. Consumer discretionary is just touching the 50-day, so you want to probably watch that one a little bit more closely to the other ones. If you're a shorter term trader, if you're an active trader, you want to look at things, you want to look at momentum. And this really hasn't changed since the last time I did a newsletter, which was on 12/17. You could see that a lot of the momentum was falling and the ratings were negative on our proprietary Raptor indicator. That hasn't changed in the last couple of weeks. So sitting on your hands right now, and I know patience is very difficult in trading, but I think that's been the best strategy. That's been my strategy the last couple of weeks. Really looking for aggressive opportunities, but I've been trading much smaller size the last couple of weeks, and mainly just waiting for the technicals to turn around here a little bit, and we're not quite there yet. Maybe we'll see that switch this week, because in an uptrend, these things don't stay. They normally 2 or 3 weeks, of price digestion. We should be starting to see some of these start to turn up this week. That's my prediction for the week. But I will sit and wait for that. I'd rather be a little bit late than early and wrong. Other sectors here, some things are improving here. You can see some things like utilities, which were a neutral to weak sector is now neutral. So some of the names kind of, I would say, reversion to the mean. Some of these names that have been underneath the 200-day moving average, or sectors that are underneath the 200-day moving average, have rallied a little bit. Still not something that I really want to touch on the long side, other than like a quick day trade. So I really want to concentrate most of my signals, or what I'm looking for, is on these top 7 sectors. All right, so we talked about performance for last week. Flows for the week, ETF flows. Something that I've been touting. There's been just colossal inflows that happen in November and the beginning of December. Last week, there's still $8 billion of equity inflows into ETFs. If you look at how this was broken out, you can see small caps, which we mentioned, have had real nice outperformance. And they actually had outperformance last week, too. They were only down 30 basis points versus SPYs, which were down, I think, about 1% last week. But $3 billion inflow. Take a look at some of these other names here. And this is where I want to put some of my focus right now, where I see there's a little bit more opportunities. This is in international markets. Take a look at these international ETFs here. There's actually, these are the largest flows of the week by ETF. And you can see that there's 1, 2, 3. There's VEA, IEFA, and EFA. These are all essentially the same thing. EFA and international developed markets. It's kind of just fancy for Europe and Japan countries. Those are what international developed markets are. That's what EFA is, and there's a ton of overlap between those different ETFs. So they all saw big inflows. There's actually a couple more. They actually added developed international markets added $1.5 billion in inflows last week, and you can see that what I like to refer to as breadth, in terms of it wasn't just one ETF, it was several ETFs in this space that investors are putting their money in. There's also actually another ETF in there, EFV, which is international developed value, which I like that ETF as well. Also saw inflows for the week. Other international areas of Europe, Europe so these are areas that I think are pretty interesting right now. If you look at VGK, which is the Europe ETF, trying to climb above the 200-day moving average. I think it's still a little bit early, but this is an area of the market that has seen, for the first 3 quarters of 2016, just about every week, large outflows. In the last quarter of 2016, there was inflows. Excuse me. The outflows stopped in the last quarter, and we're starting to see a little bit more inflows that are occurring. They're tiny. Like last week, for example, $280 million, but they're certainly not seeing outflows that we saw. Those big outflows that we saw in the first 3 quarters of 2016, we're not seeing anymore. So I view that as a definite positive. However, It still has some work to do before I really want to get majorly long into this group. If we look at a 2-year chart, which I think I have up, you can see it's been basing for a long time. Same thing with HEDJ, which strips out the currency exposure. You can see this one's above the 200-day moving average. So not looking too bad here. Same thing with European financials. Even with the currency exposure, as these ETFs do have, EUFN has exposure to the euro, but you can see it's above the 200-day moving average here, and it looks pretty good. So I'm still long a little bit of Deutsche Bank and Credit Suisse. These are trades that I've had some nice profits with, especially Credit Suisse. But I'm still I'm still long these and looking to possibly add here, as we could see that from this nice breakout in the European financials ETF. It's just been kind of sitting here, almost touching the 50-day moving average here. So not a bad place to kind of add to a long here or start a long. So I like that. So what else do I like? Again, so not much going on here in the U.S. There was some inflows into tech, consumer staples, materials, but it really wasn't nearly as sizable as what we've seen in the last 2 months. So kind of quiet, I would say, in terms of the U.S. inflows last week. So I mentioned VEA and EFA both saw inflows last week. This is an area that I'm looking at for 2017. In terms of option trades, EFA much more liquid options, and I'm looking at the January 2018 calls. This is something that I want to give a chance to work throughout the year. I don't think, considering it's a multi-country ETF, it's probably going to be a little bit of a slower mover. But you could see you've got some nice basing sideways action. Getting into this now is a little bit preemptive. We do have a buy signal on our proprietary Raptor indicator, but 59.37 is really the level, which is about a couple dollars away. So this is something that I may start a position next week and really wait for that confirmation of a move above value. But we are seeing a nice buy signal materialize here. So this is an area that I really like. I really like the international developed markets to start 2017. I'm bullish those. What am I bearish right now in terms of international? China. Borrowing Jim Cramer's Mad Money show, FXI. Not a Trump stock. This is an area that I think is really going to be in focus for the week. I think from what we've seen Donald Trump say so far, his bark seems to be a little bit worse than his bite, but it does seem like he wants to focus on, trade with China and putting that underneath a microscope. So whether or not we're actually going to get a trade war with them is not certain right now, but it doesn't seem to be very positive for the rhetoric that's going on right now. So, and we're certainly seeing that. If you look at these option trades that occurred last week, these are not small trades, and they're going out long term. These are more of the signals that I like to see. Somebody buying, putting a pretty big chip down, $1.3 million premium trade, both for January as well as June. So these were last week's trades. I also got into a trade. I have this trade on right now. This is a debit put spread. I'm long the 34 puts and short the 30s. This was the result of, this is over, I'd say, a week and a half ago that we saw a pretty big put spread that was put on that I followed. So, whether or not I want to adjust that based on these new trades, probably not. I think I've got plenty of time for this one. And as long as we're underneath the 200-day moving average, which is this white line, I want to be sitting with bearish trades in FXI, which is how I'm positioned right now. So if by chance we do see FXI get a short-term bounce, I could always roll that spread out and go out to possibly June or January. But that's my two feelings right now for international markets. Long developed markets and short China. I'm also looking at Russia, RSX. I still like that trade as well. It's another area that I want to be long. Looking at other charts, TLT, we've been seeing a lot of, bullish dip buying going on in the option world in TLT. The trade that I'm currently in, this is kind of shorter term. February 126 calls. I'll probably be in this trade for not much longer than a week. We've got a lot of economics that are out this week, so that may provide a catalyst to TLT. If we don't get it, not a trade that I want to sit with for too much longer, especially in something that is way, way in a downtrend here below the 200-day moving average. It is just coming off these oversold levels, which it was oversold basically for about a month. So let's see how much this can move. This bounce can play out here in bonds. If we don't get it in the beginning of the week or throughout the week, then I will take off that trade. I was able to hit one target, I believe, either Thursday or Friday of last week. And then, another area that we've been seeing, again, short-term call buying is in GDX and GDXJ. I mentioned if I didn't mention it, they both saw inflows, small inflows last week, but definitely a change in trend. We see a lot of January call buying in. You have to be a little bit careful with GDX and GDXJ. The implied volatility is always super high in these ETFs, so a little bit easier to play in stock. But coming into a week where we've got a jobs report, we've got ISM data, we've got those Fed minutes, you could see the GDX as well as bonds, as well as the US dollar move a little bit. So, if you are playing a short-term bounce, I know some traders were doing that last week in the gold miners. Take a look at this down trend line, this dotted line I've got. As long as we're above this downtrend line, you could play a bounce. We've got a fairly recent buy signal going on, and also 2145. You want to see a move above here. But if you notice, Thursday had that big bounce day, and Friday had a retracement day, down about 3%. So could set up for a nice long, maybe a day trade on Monday, or excuse me, Tuesday and Wednesday. All right. So those are the ETFs of the week that I'm watching. We do have some stocks that we're watching as well. You have to be a paid subscriber to look at our watch list for those. If you are not a paid subscriber at Tribeca Trade Group, you could go to tribecatradegroup.com. Get involved in our Elite Trader package. This is great for the active and part-time trader. We put together real-time trade alerts that you can get on your phone. We come up with a very comprehensive, which I went through some of it. Our weekly newsletter really gets you looking at the macro forces, which I always want to take do a top-down approach, looking at the big trends, looking at what's going out internationally, as well as in the major indices, and then drilling down to those micro individual names. But we do this on a weekly basis. And, also, every day I put together a summary of the most aggressive, the best option plays of the day. These are not your weekly options. These are more, your monthlies going out several months, like we talked about in FXI, as well as, the EFA trade that I detailed for you. Other trading rooms, I know that they've got guys who are pumpers and dumpers. They will talk about how great a stock is, trying to get everybody into it, and then they dump it once everybody gets into it. It's not something that we do here. We do the opposite of that. So check us out. Right now you can get half off the first month. We've got a little bit of a trial for you. You could put in the code TTG and you can get half off the first month. And check us out. We also do daily videos as well, talking about the major events. Very similar to, when I used to trade institutionally. Traded institutional money for 9 years. So I'm used to doing these summaries and finding the best themes and the most interesting themes of the day. So thank you for watching today's video, and have a good luck in 2017 and the first week of the year. Thank you.